A brutal fall in Bitcoin values shocked the market on Monday, briefly dropping below $30,000 for the first time since July 2021. The world's largest cryptocurrency is now worth less than half of what it was in the fall season. Similar drops have also been reported for the other cryptocurrencies like Ether and BNB, while trading volumes have also dwindled on major exchanges. Several experts now claim the sector is headed for a crypto winter, whose astounding growth will be replaced with an extended period of contraction. Hello and welcome back everybody to Crypto A1, where you subscribe for video updates on everything going on in the world of cryptocurrency. Bitcoin and crypto never sleep, and neither do we. The cryptocurrency market is getting drained right now, as we are watching a sea of red. So in today's video, I want to talk about what this means for you as a crypto holder. But before we get going, be sure to like this video if you haven't already, as it really does help out the channel a lot. And subscribe with notifications on for more crypto-related videos like this one. This weekend marks the first time the crypto market has entered a state of extreme fear in months. What does this mean for crypto investors and how can we use it? Why measure fear and greed? Why measure sentiment in the market? In a way, because crypto market behavior is highly emotional, crypto investors often act very emotionally. When the market is rising, there is often a tendency for people to get greedy, resulting in FOMO, or the fear of missing out. The irrational reaction to seeing red numbers makes people sell their coins as well. The Fear and Greed Index is designed to protect you against your emotional overreactions. They're saying that when the market is close to the top, that's when people get greedy. But in reality, that's when you should be taking profits. And when the market is on its way down or near a bottom, that's when people get scared and start selling. You go broke that way. In reality, what smart investors do, and Warren Buffett constantly says, is be greedy when others are fearful. Be fearful when others are greedy. It only means that when the markets are on the way down, that's when you should buy. And when everybody else is greedy as the markets are going up, that's when you should sell. Extreme fear can be a sign that investors are overly concerned, which could be an opportunity for buying. Whenever investors become too greedy, the market is due for a correction. Feel free to comment down below about how much faith you assign to a metric such as this. This is not to say that Bitcoin won't drop another significant percentage tomorrow. I have no idea what the prices will be tomorrow, and neither do you. There is no way to predict the future, but metrics like this indicate we're closer to a bottom than to a top. Cryptocurrency is currently owned by just 3.9% of the world's population. Just imagine when we hit 50%. We all know that it is not going to be easy, right? If it were easy, then there would be no opportunity. And we are early in this game. This chart by analyst Willy Woo proves it one way or another. He calls it the "we are still early" chart. Bitcoin has consistently outperformed all the other asset classes for the past 4 years. When you look at it from a broader perspective, things become clear. This chart shows the rolling 4-year growth of Bitcoin versus every other asset class. And you can see it's not even close. Despite its diminishing returns, Bitcoin has outperformed every other asset as long as you are willing to hold it for at least 4 years. So, if you bought it in 2020 or 2021, you still have about 2 or 3 more years to hold it. Sorry, but those are the rules. Regarding the blue trace, which represents Bitcoin performance, we can say that by the time the blue trace moves into the cluster of the other assets, Bitcoin will have matured. You can clearly see that Bitcoin is getting close. This shows that we probably have 1 or 2 more big bull cycles left before Bitcoin reaches mass adoption and peak maturity due to diminishing returns. Would you be willing to hodl through the downtimes? You tell me. Next, I would like to tell you about some crypto projects and altcoins implementing these challenging times. Let's start with Terra Luna and Bitcoin. Tough times call for drastic measures, and today, Luna Foundation Guard, or LFG, a non-profit organization that supports everything Terra or Luna, has voted to lend $1.5 billion in crypto to protect its native stablecoin. As part of its council decision, a total of $750 million in Bitcoin will be lent out from the organization's reserves and $750 million in Terra USD to keep the latter asset pegged to $1. According to the founder and CEO of Terraform Labs, Do Kwon, the organization provided the loan to an unnamed professional market maker. The loan has been made amid extreme volatility in the crypto markets, as UST briefly fell below its dollar peg. This will mean that some of their Bitcoin reserves will be sold to help keep the peg to UST. Do Kwon retweeted the exact message. First, the Luna Foundation Guard is not trying to exit its Bitcoin position. The goal is to have this capital in the hands of a professional market maker such that they can buy more of their stablecoin UST if the price falls below the peg, or they can sell their stablecoin and buy more Bitcoin if the price goes above the peg, thus significantly strengthening the liquidity around the UST peg. So they'll buy more Bitcoin if it goes above, and they'll sell it if it goes below all, to strengthen the stability of their stablecoin, UST. This is precisely why Terra Luna bought so much Bitcoin in the first place. Next, let's look at some news about the adoption of XRP and Bitcoin. SBI Motor Japan, a subsidiary of SBI Africa Co. Ltd., has made it possible for its customers to pay for used cars with Bitcoin or BTC and Ripple or XRP. In an announcement released on Monday, SBI said the development marked the first time the cryptocurrency XRP will be offered on an international e-commerce website in Japan. The settlement of BTC and XRP transactions will occur on the SBI VC Trade Co. Ltd., a cryptocurrency exchange owned by the SBI Group. SBI says that the platform will utilize appropriate security techniques through crypto transactions to prevent money laundering and terrorist financing. The SBI further revealed that it is currently monitoring and scrutinizing its business partners for compliance with anti-money laundering or AML and corporate regulations. Besides adding settlements for BTC and XRP, SBI said it would continue to support other vital projects that serve the needs of its expanding client base. As a holder, this means that you will have a little bit more use on each network. About 5,000 used cars are exported by SBI Motor Japan each year, mainly to Africa. This move was driven by the growing demand for cryptocurrencies in developing countries, particularly Africa, where access to basic financial services is limited. A World Bank survey found that more than 1.7 billion people lack access to basic financial services and have been left out of beneficial activities. Next, we have historical news for a DeFi altcoin, Compound. The arbiter for creditworthiness, S&P Global Ratings, slapped Compound Treasury, a product of Compound Prime LLC, with a B grade. This means the USDC powered yield platform is considered speculative, but it is currently able to meet financial commitments. In a statement, S&P said the outlook for Compound Prime was stable. So, why is this historic? The Compound rating was heralded as a DeFi first, despite the poor marks. This appears to be the first time a major credit rating agency has rated an institutional DeFi product. In a blog post, Reid Cumming, Compound Treasury's general manager, said, "This signals tremendous progress in the crypto industry's maturity, as traditional institutions begin to judge the risks of digital asset-powered financial offerings." The rating is a translation mechanism for institutions interested in diving into the world of DeFi, Cumming told CoinDesk. Cumming added, "What is really interesting and important about this is it really does show that DeFi can be measured, weighed, and incorporated into more traditional financial risk methodologies, and additionally, also understood by traditional finance. I think this is a win for Compound because it shows that traditional entities are validating these DeFi protocols. That's bullish." So that's it for today. If you're still here, I bet you enjoyed the video. Give it a thumbs up and don't forget to subscribe if you haven't already. We'll regularly post finance videos to help you grow abundantly, so stay tuned. We'll see you in the next one.